Greetings, and salutations to all my brothers and sisters out there. Thank you so much for coming in today. I appreciate your time. And here today, we want to talk about 5 things that can absolutely wreck your account if you don't understand them, and 5 things that all successful traders understand completely while they're in the game. Now, there's hundreds and hundreds of things that really we need to understand, but nobody's going to sit around and watch a hundreds of things video. So let's just do 5 of them today. And we want to start off with number one. You have to have a plan. You cannot enter into stock trades, especially options trades, if you have no plan. Do you have a strategy going into this? Why are you putting on this trade? And a reason that somebody said it, or you heard somebody say something, or it's been running and all these different things, is not a reason. It's not a reason. You need to be able to define your reason as to why you put on this trade really within 1 or 2 sentences. And because I saw it on CNBC is not one of those sentences. You need to be able to say something like, I put on this trade because it is now rejected off of VWAP 3 times and now I'm taking the trade. You need to put on this trade for some kind of technical reason. You can't just be on there, well, it's been going up. I mean, yeah. And also it will come back down. So you have to have a plan before you go into a trade. Every single trade. Without a plan, really you can have no success. And if you don't have a plan, you don't have your edge. You'll lose the edge. You'll just go into a trade without having a real reason that this is set up for an options trade or regular trade at all. I mean, even if you're looking for a long-term holding pick, even an ETF, you need to understand why you're buying it. You need to have a reason for buying it, a reason for getting in there. If not, you're going to end up with a bunch of bad trades. You're going to end up in a bad position. Your stock portfolio is going to end up in a bad position, and it's going to be a bad day. So number one, have a plan and a reason for getting into the trade that you're getting into. Number two, not having enough buying power. And I tell you, I can't preach this enough. I say it all the time. I'll continue to say it, and I'll say it and say it again, because not having enough buying power will absolutely rip your portfolio apart. When you don't have enough buying power, you're sunk. You're trouble. It's huge problems. Wall Street's graveyard is littered with tombstones that says, I let my buying power get too low. You have to understand, when that buying power is too low, you can't do anything. You can't defend positions. You can't put on winning positions. You have to close losing positions. All of a sudden now everything's going down and down and down, and you're selling off trades at a loss. So trust me when I tell you, please make sure that you have enough buying power. If you have a high level of buying power, then you have the ability to just set it out. Sometimes your trades are winning trades, but not yet. Sometimes you need 2 more weeks, but if your buying power sinks underneath, you can't have those 2 weeks. You have to make decisions now. And if you don't make decisions now, no problem. The risk management team will come in and make decisions for you and sell off your positions. No offense to them. But you have to make sure that you have a strong buying power. If you don't have your buying power strong, it is easy for your whole portfolio to get ripped apart by 30, 50, 70%. And if that happens 2 or 3 times over again, you're done. You're done. It's all over. But understand, I mean, I'm with you. I was a small account, tiny account. So I understand not having a lot of money in general, but it's okay. You just have to make sure you have enough buying power to what might happen. If you're in doubt, keep 50% of your buying power. If you're in doubt and a new trader and you don't really understand how these big pullbacks happen, and how if you have 6 naked puts on, what the evidence of that would be if it fell a whole bunch, the evidence would be you're well underwater, and now you have to make big decisions. So at first, as a small trader, a new trader, a small account, keep your buying power at 50%. Keep it at 50% until you're well acclaimed at doing trades. You're acclimated to all these things, and your buying power doesn't take these huge dips. Is your buying power going to take big dips? Absolutely. It's just the nature of the beast. But if you've got on the wrong structures, you've got on the wrong strategy, you're too far over on the one side, and you're down to no buying power before the market falls, you're going to be in a heap of trouble. So please heed that warning. Keep your buying power strong. Number three, not listening to warnings. Everybody out there has a little bit of an ego. People that get into this business, and it kind of goes hand in hand a little bit. They're stubborn, they're this, they're that, they're whatever. But the problem with that is that won't make you money. You will take a beating out there if you go out there and you decide you're just going to do it your own way. Yeah, I know that Jeff said not to do that. Yeah, I know that he said not to do that 4 or 5 times. But hell with it. I'll just go ahead and do it. I'm sure that I can pull it off. Well, let me tell you a story. You can't pull it off. This is not like Vegas. This is not something of happenstance. This is a highly calculated, highly mathematical market that there is no loopholes and nonsense that you just get away with. You have to listen to warnings. You have to listen to people who have went before you, made terrible, tragic mistakes, this guy, and has suffered the consequences for it and have come through on the other side. It's like your parents used to say, I'm trying to save you the effort of having to endure the pain of whatever mistake that I've already made. That's why I tell you to keep your buying power high. Please listen to the things that I'm saying. I'm not just on here to just take up my time. I'm here to try to help you. And I'm also here to try to, form a community where we can help each other. There is no way you should just absolutely listen to anybody blindly and take it as their word. But if somebody's giving you a warning about an options trade, about like, hey, you shouldn't trade strangles whenever the IVR is below 50, 40, 30. Well, you know what? Look into that. Think about that. Well, there might be something to that. Hey, when somebody tells you, well, around 20 delta is a good place to start if you have a little bit of risk. Well, you know what? You did that. I've done that. That's where we all started. We listened to that advice. So listen to people when you get advice. And please do not just run out there and think you're in it for yourself. This is no time to be going all full Leroy Jenkins out there on anything. You're not the Lone Ranger. This isn't Rambo. Whatever person you want to put in there, don't do things that people have said not to do. The reason you don't do them is because we're trying to save you the pain and anguish of what we've already suffered, which is money loss. Nobody wants to lose money. Nobody wants to watch their account hemorrhaging red. So please listen to the warnings of people that you would trust, people that you consider an advisor. Look into what they're saying. Just don't blindly assume that they know what they're talking about. Even if it's something I say, by all means, look into it. Look it up. Anything I tell you, by all means, fact check it. I don't care. But you need to listen to what you've been told because hero shit doesn't work in the stock market. Number 4, this one may be challenging to some of you out there, having no patience. Now, hey, like I say, we all kind of have the same kind of mentality, same personality types, whether it be major or minor. But having no patience is absolutely a destructive force in the market. You will hear, if you're in the market for any time whatsoever, that the stock market will take money from the impatient and give it to the patient. And that's absolutely 100% the truth. I don't know how many times I've had stocks that just sit there and do nothing and lollygag around and make no money and terrible for running options on them. And finally I get so sick and tired of seeing them, I sell them off for no reason without looking into anything. And immediately it's almost like they heard I was selling the stocks and the stock goes up. I'm sure if you've been around, that's happened to you as well. Or same thing can happen in options trading. But the problem is we just needed to be a little bit more patient. There wasn't any news catalyst going on. There wasn't anything happening. It's just a lull in the stock. And oftentimes that happens. Now, hey, not every stock goes into a lull. Sometimes they just go to sleep and don't wake up. But you have to understand, if you like the stock, you had a good foundation going into the stock, that perhaps maybe, the stock's still okay. Maybe it's just not hot right now and maybe not in play like everybody likes to, get into the latest good thing and lose their money. But what we do is we get in there and we make a solid decision. Are we going to sell this stock? It's been a dog. And make a solid decision based on some kind of something, part of the plan, number 1. So we look at this and is this going to work out for us? And we sell it. And even if, yes, it will go up sometimes, and yes, sometimes our thesis is wrong, but we can stomach it a little better knowing that we at least looked into it. It's much harder to take that perceived loss of money whenever you didn't do anything, just sold it for no real reason, just because you was tired of looking at it. Boom, it shoots up. Well, then you're the only one to blame it, and you didn't do anything, and now it kind of sucks. So have a reason for selling the stock. Have patience with what you've done. Just because that option hasn't come into fruition yet doesn't mean it's dead. It doesn't mean it's over. Just because there's been a point of touch with your option trade doesn't mean it's over. So have patience, have a foundation for the move you make that may be resulting in from a lack of patience. It'll serve you very well. Hey, let's go. Number five. Number five is a poor foundation. A poor foundation will absolutely destroy your whole portfolio. You need to have a good foundation in anything that you do, no matter what it is. And that foundation comes from hours and hours and hours of learning what your craft is. In this case, we're talking about the stock market. But you don't want to be somebody who's, especially a new trader, just rushes in and, hey, my buddy's got 5,000 shares of this, and you rush in and buy 5,000 too, and then all of a sudden you just take a butt kicking, and you had no foundation, no plan, no nothing. You have no reason that you got into that trade. You don't even know what an edge is. You don't even really know what a stock is. And before you knew it, you were out money. Of course, you don't know what you're doing. No offense, we need to learn what we're doing. I spent hours upon hours and hours and hours of anguishing just learning things. I would watch and try to learn something and stuff for so long that I just didn't even understand what they were saying anymore. Not even stock talk, just basic words. I mean, just poured into it to try to get to understand, and I like it. I enjoy it. It's part of kind of a passion for me, and a nice passion that it has been. So you just have to have the foundation. What is a stock? What is an option? Then you build up to the next thing. What does the stock market do? How does it trade? What are the different stock markets that I can trade in? NASDAQ, SPY, and all these different things. And you look at all that, and then you begin to build a little bit of structure to what you're doing. You look at it, okay, I can buy some stock because I think I know what stocks are, and I think I understand how they trade. And I've been looking at these 5 stocks, and I like the thesis here on this one. Now you can get into, maybe I want to dive into options. Hey, and always first get into defined risk options. What is a defined risk trade? Can I can I make money? How does it make money? What is the deltas, the gammas, the thetas of this? What are these Greeks that they talk about? You have to know these things before you just dive into trading. You can't just go into it on a wing and a prayer and just figure out it's going to work. Yeah, you could get a lucky trade in there. Yeah, you could make some money, but you could also go outside and get struck by lightning or win the lottery or a bunch of other very rare things that happen. It's just not the way it's done. There's not a bunch of loopholes and angles and avenues that you go into the market that these people don't know. This is the stock market. This isn't no joke. This isn't some kind of, playing ground that these people do. We're talking billions of dollars. These people aren't going to fool around with their money, and they're certainly not going to even worry about your money. So you have to make sure you know exactly what we're doing. You have to make sure you know the foundation of what we're doing, and you have to have the reason, the thesis, the idea, the patience. Everything builds upon it. All 5 of these structure into one thing. All reasons structure into one thing, and that is portfolio health. So review the 5 and think of how they relate to each other. Then when you want to get into something or you're thinking about making a move, go, hold on now. Have I really put in? Do I have a reason behind this? Do I have an edge of why it's trading this way? Do I know what exactly I'm doing? You're building, and you can't live in an unfinished building. You can't live there, and your stock portfolio will not live there as well. You will just keep hemorrhaging money and lose money until you just absolutely decide to call it quits. You have to have an edge. You have to have the foundation. You have to have patience. You can't let your buying power go low. Everything we've talked about today, please take it into heart. Take it into your mind. Theorize it, look at it, study it, think about it, prove me wrong, whatever. Oh, I don't need all that. There's no reason to go in there and just go against the grain of what everybody's telling you. So, hey, I hope your portfolio is doing well. I hope that something in this video has served you well. Like and subscribe if you would like, and you better believe it. We'll see you next time on Trading in Your Future.